Amazing. So this is Fundamental Edge. I want to welcome you all specifically to our course here, Finding an Edge in the Markets. It's part of what I call within our Discord group, a I Spy Academy. And the reason why I decided to go with this name is that over the past few years, at least the way that I started, my initial understanding was SPY encompasses pretty much the entire market, right? The S&P 500, ES if we're talking about futures. So to me, it was really how do I start to develop an understanding of what is this really? What is the system and how does it function? So that's why I decided to go with that. Essentially, SPY branching off into a bunch of other things, but really just building that foundational understanding of, oh, what am I doing here? What is this vehicle? And how do I take advantage of these opportunities? Today will essentially be a branch off or an extension of the initial conversations that we all had individually. Not all of us are here today, which is why it's also being recorded. And this is also going to be placed on the YouTube channel. So this is for everyone that wants to follow along at later dates. You'll have an opportunity to join. It might be, we'll talk about what that would look like when we come to putting together assignments or projects, things like that, because that will definitely be a part of this. I want it to be engaging. I don't necessarily want this to be a thing where we just show up week after week or day in and day out and have information read to you, right? That's the very hard way to learn. So I wanted to be as engaging as possible. Today specifically, just exploring structure of the course, the overall objectives, my expectations from the group, any sort of expectations that you all might have beyond what we initially discussed. And we will also dive into introduction of components to the market, a bit of philosophy as well. This course will carry a structure that presents us with a weekly lesson that is made up of fundamentals and mindset. And when I say mindset, it really is more of some sort of weekly psychology or philosophy concept for us to take away or start to think about, not only in relation to the market and what we're doing on a day to day with trying to build that financial foundation, but more importantly, how can you start applying that to your everyday or day to day, right? Because for me, this is something that you should start to include or incorporate in your day-to-day life. I feel like all of this understanding, it shouldn't be something that you necessarily just do on the side, right? And I say this because the more that you're willing to live out all of these fundamentals and really hone in on what we're doing here, the easier it's going to be for you to really put your best foot forward. Because at the end of the day, all of this information, it's going to be available to you at any point in time. And anything that I tell you all is things that I would have conversations with my own close friends, right? My own family. And that's why I'm building this the way that it's structured is really to build a community, to build that sense of trust with one another, to have that understanding that it's not something that you necessarily need to do on your own. That being said, if you all felt inclined to, I definitely encourage you to help us build out this community. As you can see up here, we have structured or started to build out some social media accounts. So definitely encourage you to at least follow and engage and give your feedback as we progress and really get to know each other. And as we get started here, a little bit of an introduction or background to myself. I have been specifically within the market for about 5 years now, right? I'd say leaning on 6 now in the next couple of months if we're talking exact numbers. But to me, um, starting to inch closer to that decade mark, it's been a lot of learning, trial by error, as many of us experience, especially in the early years. And I say early years because this is a lifetime and a long-term process that we will all have to undergo. I promise you, it's not something that many people get to master within a couple days, within a couple weeks. It really is a long time process, because at the end of the day, a lot of these things, a lot of the factors that will play a role in what we learn, you'll quickly catch on that they change from season to season. They change based on how society is experiencing change, different industries coming and going, things along those lines. So we really want to make sure that we are building that understanding of, one, what are all of these things, and how do we apply it to what we're looking to do in the markets. I am now also I'm going on my 7th year as a professional in the field of education. So for me, this is something that I hold very dearly to my heart, because I think, or I'd like to think, that I have a pretty good understanding or a knack for developing an understanding of how systems work. And for me, the way that I approach anything that I do on a day to day, or what I like to spend my time on, is developing a full breakdown, a full understanding of what I'm devoting my time to. Because as we all know, our time here is limited, right? Unfortunately, we won't be here a whole lot. So for us, it really is a matter of figuring out, how do we pass this on to those that come after us, and how do we leave this a better place? Which is why, when you take a look at our overall mission, it's exactly what it reads here. Fundamental Edge does exist to help individuals develop a better understanding of themselves and the world around them through a clear educational path, right? Understanding what you need to know and how to apply that knowledge and those skills that you're learning, and really the emphasis or the intent to empower people to build a strong foundation in financial literacy, trading, and personal development. Because this shouldn't necessarily just be a matter of, how do I accumulate money? It really is an understanding of, how do you succeed beyond the markets, to be able to create a long-lasting impact in your own life and within the communities that you all find yourself in, respectfully, and then future generations coming after us, because we're all coming from different areas, different places of the country, some of us different parts of the world. But we all, I think, at least from the conversations that we've had, share similar visions or similar missions with the type of work that we would love to do, and the outcomes that we would like to see when we start to talk about, what are we doing with our success in the markets. An overall breakdown of the course itself. You all have already received the syllabus, so I hope that you've gotten the opportunity to review a good amount of it. The QR code here will take you directly to it. Like I stated, a lot of you already have it, but it's there for you if you wanted to have access to it. Essentially, this will be broken down in 2 full semesters. And I say 2 full semesters because it is essentially about a 52-week course. So it'll change dependent on all of our availability, how fast we are going through content, right? Because if a lot of us start to really feel comfortable with certain subjects, we will probably cover more than one lesson at a time. It all depends on where we each find ourselves and how comfortable we are in moving forward beyond this first lesson itself. So throughout the week, those conversations will be had, and then we'll situate ourselves to cover whatever content we feel comfortable covering in the upcoming week. The main focus areas here are financial markets, the understanding overall breakdown of them, the fundamentals that go into understanding why is a company successful, why is it not, overall technical analysis. So are all of your charting, understanding what are you doing, how do you not carry an overloaded chart, and just how are you preparing yourself to execute rather than to react to what you see happening on a day to day or when the market is open, because the reality of it is that your money will always be made when the market is closed. That's when you're making your plan. That's when you're preparing. When market is open, we should be acting accordingly to our plan, or to what we see fit based off of our own understanding or conception of current market environments. Beyond this, we touched on it a little bit earlier, to trading psychology, the philosophy behind it, an overall understanding of, as a human, as an individual, how do we come together as then a community, and how does this impact certain movements or seasonality, things along those lines. Touched on this a little bit. When we talk about fundamentals, it's the economic indicators, valuations of companies. When we talk about technical analysis, it's the charting, it's the indicators, understanding where we have our supply, where we have our areas of demand. What does that even mean, right? How do you digest all of these moving candles? Because when you start to dig into the deep end, there's over 100 indicators, right, available to us. And the reality of it, and even looking at a blank chart, when you're looking at candles, what is that candle telling you? Right, at its essence, it's telling you whether price is moving up or down, a red candle, green candle. Sometimes you can switch those colors. And that's exactly what indicators are doing as well. All of the candle itself and the indicators, they're all a derivative of price action. So that's going to be one of our initial steps, is building an understanding of how do you analyze price action, and how is that being displayed on your screen, whether it's just the candle movement, whether it's showing you overbought, oversold territories, right? So these are all formulas that are pulling from that data that's telling you when things are being sold, when things are being bought, in what quantities they're being sold, and in what quantities they're being bought. Definitely a great understanding to be able to have, and overall just an understanding of how are you reacting to these things, and what biases might you have already came to the market with, and how can you make that a strong suit for you, right? Instead of making it a bias where it's going to make you feel inclined to dive into a trade, or to FOMO into something, right? As you might hear repeatedly being stated. How do you use that to give yourself an understanding that, like, okay, this is why I'm doing certain things, or typically when I've seen the market do X, Y, and Z, people have reacted in these ways. Definitely a really good foundation that you'll need to build for yourself, because we all have different understandings, and that's definitely an edge that all of you have specifically. There will be some sort of assessment, and I do have some policies behind attending the class, or your overall participation in it. I do want to have a way to measure outcomes, right? To measure the overall progression of all of us. So there will be, when you think about your quizzes, it's not what you typically would think in like grade school, or even at the college level. It might resemble that, but I want it to be a little bit more engaging. We'll start going into that breakdown in about week 3, week 4, when we start getting those initial assessments. Overall, every single quarter, there will be some some sort of big get together where we have an entire debrief of everything that's been covered so far. And at certain points, I also want us to put together what I envision as projects when we start to talk about specific stock analysis, strategy development, things along these lines. So, as a group or individually, depending on where we're at, how comfortable we feel with each other, if you are interested in specifically looking into why might Intel, INTC be a good opportunity at this point in time because of X, Y, and Z, the government wanting to do a lot of production in the US, the understanding that Intel itself, what made it very big or what made it successful in the early 90s was the fact that it was a production-based company, right? In comparison to things like AMD, NVIDIA, Intel at this point in time might not necessarily have the innovation or the creativity to the point of these two companies, but what it does have over them is production. They've always been able to produce at a mass scale. So, what does it look like for this company to become viable again in the long term? Or is this a company that's potentially going to be picked apart? Right. And it might be the case that other upcoming companies like Micron, so MU, that's competing at the production side of things as well. Right. Just a few years ago, they built out $1 billion facility that's going to ramp up production. So how do all of these things play a role? That's potentially one of the projects that we'll take a look into. Not necessarily that stock, but that's just something that I personally been digging into myself the last few months and really years so. To great opportunities to start thinking about what are you interested in within the markets and what are your specific investments that you might want to build a better understanding of as we progress. And overall, this will tie into some sort of final project or like capstone presentation at the end of all of this, where we'll essentially have a project that ties in every single concept or theory, whatever we cover within the course. It'll really be a good opportunity for us to not only feel good for ourselves, right? And have the feeling of, man, I got through this. I was able to really build my foundation, but then to show others that might be interested in coming after us that this is ideally the type of understanding or the type of project, the type of research work, the type of content that you should be able to put together for yourself. Because at the end of the day, the hope is that you become self-sufficient. Right? We don't want you all having to rely on anybody other than yourself, because you will have the understanding of what it takes to be an individual and to be able to take a piece of the pie on your end. So I say that because we're never going to be here to be some sort of signal group. Yes, you'll be told what I'm potentially going in and out of my thought process, why I entered certain trades, whether it's options contracts, future contract, anything that I might be working with, you'll be told that that will be very clear and transparent, but it won't be for me to tell you, hey, do the same, or this is your go ahead sign. That will never be the case. It'll all be for the purpose of showing you why I'm doing things. And just to be clear, I will not be a 100% win trader, right? That's very unrealistic. So it is to develop an understanding of both what went right, what went wrong, how can I continue to improve? Because I am definitely growing and learning alongside you all. Yes, I have a certain area of expertise. To some of you, we've talked about my educational background, being close to completing a PhD, but at the end of the day, that doesn't mean anything within the markets, right? And I say this because no matter how you might feel about your own progression or where you find yourself at this point in time, you don't need any sort of educational background to be able to develop this understanding. And my hope is that you all reach a point in time where you know more than me, right? Or that you're able to be more successful than what I get to be, because that to me is going to really be the cherry on top, right? The whole reason why, or the hope behind why I want to put something together like this. We'll go ahead and start diving into more of the content that I intended to cover in this session. I want, at a minimum, for us to develop an understanding of the importance for wealth building and what all of these things listed here, how they have a role in economic stability. Things like our equity market, so the stocks, bonds, commodities, Forex. So when we're talking about currencies, that's what we're referring to with Forex, not necessarily Forex trading, but just what are currencies and how do they function, and crypto, because all of these things are intertwined if need be. And if there's interest there, we'll go ahead and add an additional component that I didn't necessarily want to introduce today, but it would also be real estate. Right. And I say this because when you take a look at the markets, real estate itself, it's a wealth building money market too, right? So when we start to dive into things like seasonality, we'll touch on what points in times we traditionally see people moving money from market to market, because it doesn't just live in the stocks, right? It goes from it goes bonds, stocks, we move into commodities, we have people moving money in and out of the crypto market. We have people taking their gains and buying property. So it will be a great opportunity for us to just have that understanding of when traditionally are these movements happening, because I think that a lot of the time when we start to develop an understanding of money movement, it's typically within the sole context of the equity market, right? When you talk about it going from sector to sector and the seasonality within those sectors. But the reality of it is that money does leave equities from time to time. So we'll go ahead and make sure that we have that understanding as well. When we're looking at equity markets, we to an extent have this understanding, right? It's a representation of some sort of partial fractional ownership of a corporation. You are putting up money to own shares of a stock, right? You gain some sort of equity that gives you some sort of entitlement. Some companies will have things like common stocks, preferred stocks. If we all didn't know, there are different types of stocks that will yield different types of opportunities. Common stocks is typically your typical stock that you will hold. If you hold a certain amount, or depending on the company, you might have some sort of voting right. I say this when I think about specifically like publicly traded organizations that, for instance, your sports teams, right? If we all didn't know, some sports organizations are actually publicly traded. I'm a huge football fan or soccer fan, depending on what term you want to use. If you think about English teams like Manchester United, they're a publicly traded company. If you own shares of Manchester United, whenever there's some sort of board meeting, when they're getting ready to elect any sort of representative within their organization, as long as you own one stock or one share of their organization, you have voting rights, and they will send you an email and you will get to fill out your specific vote for whatever it is that the board is meeting about. So different organizations will work differently, and that's something that I encourage you all to really dig into when you're thinking about investing your money, is understanding how does this company work and what is offered to me for owning that stock, right? Because essentially what you're doing is to an extent, you're lending them money, right? you are giving money to the organization. So a lot of the times they will give you some sort of benefit or some sort of authority over some sort of process. Beyond this, we have things like preferred stock. So this is where your dividends come in when you are thinking about where can I put my money and get some sort of return, whether it's on a beyond the year, ideally year over year percentage increase when you think about monthly payments, quarterly payments, yearly payments, whatever it might be, in addition to potential voting rights. This is what we're referencing when we talk about preferred stocks. These, the way that I see the equity markets, they're significant for long-term growth potential. This is all seen through price appreciation, through dividends, and overall the opportunity to accumulate or to, how would I want to say this? To store your funds in areas or rising industries or just overall things that you have specific interest in, with the hope that, of course, like we stated, they accumulate wealth. So this is something that you want to develop a good feel for as far as how do I hold on to this for as long as possible. I know that a lot of us will be inclined to put money in. It might be the case most of the time where, let's say that I were to, specific example for myself. At the end of last year, I went ahead and invested $1,000 in Intel stock. So it's a stock that I've been researching for a couple years now. Very blessed that not too long ago, I want to say about 2 or so months ago, we actually got a pop. We initially got a drop, right? When they fired their CEO, there was a lot of friction there. So I was red for a while, held on more than I wanted to. But then also with the realization that, man, this is probably something that I should have had or that I should have in mind to hold for at least 10 years. But I didn't. I ended up selling out about 2 months ago at the pop because of what I was seeing specifically going on in the market and feeling comfortable. Because at that time, my overall portfolio was up about 20%. And that was scary to me because it was up 20% within just a few months. It was like half a year, right? When we started to see a little bit more than that, but essentially the pre-pump before our presidential election, and then that whole increase lucked out into having a good amount. So I felt the need to take profit. And then looking back into what I'm seeing right now, yes, that was a good choice, but also how does that play a role in me being able to now buy back in things along these lines? It really is developing a plan for yourself, right? So I'm saying these things and I'm bringing up my personal my personal experience or what I did specifically, not going super in depth. We can do that in between weeks, but to give you the understanding that everyone has their own separate mission. So it really comes down to figuring out, what do you want to do specifically? What is your end goal? Are you building this to buy yourself a home? Are you building this to leave some sort of retirement? Are you building this to leave a fund, to put this in a trust for those that come after you? What are your plans, right? We definitely want to make sure that we're able to develop a solid foundation for yourself in regards to what you want to do specifically with this money. And at a worst case scenario, as long as you just keep investing in what you find an interest in, that's the hope, is that you are just building little by little, brick by brick. Overall, a robust stock market attracts investment and it facilitates business expansion, right? When we're talking about the market as a whole, and when we're talking about industry development, let's take a look back at um let's see, how far do we want to go? Let's go 2019. right before we had that initial COVID closure in March. Do we remember, or were we in the market at that time? And do we remember what sort of industry or what market we saw an expansion in between late 2019 and I want to say about mid to late 2021? I
in
know
terms
we're
of
on
where a lot of money was like shifting towards.
correct. Yeah. Where did you see
Um,
companies growing pretty rapidly?
I think some of the ones that I remember, I think it was wasn't it like airline and then maybe some cruise companies?
That was definitely part of it. And I would say that happened more so after we started to see lockdowns or closure regulations eliminated, right? So when things were opening back up. So that was kind of at the tail end of things. But between 19 to 21, it was anything within healthcare, anything within tech, and anything within energy. Those were the three big ones. One because a lot of I and I did I won't go super in depth, but for instance, like energy, you need oil to operate everything, right? And if we don't know how the pharmaceuticals work, a lot of that is actually used in our pharmaceuticals as well. So things to dive into a little bit at a later time. But these three industries or sectors are ones that saw very large growth at that point in time. And then at the tail end, what you were referencing when we then start to see a transition into robust travel. We start to see a growth in tech, right? All of these chips now being able to be produced at a faster rate, then going into the growth of AI and how does that play a role in all of those other things. So I bring this up because although it was a shaky point in time as far as the market itself, remember late March to what was it about February or maybe even April, it was a huge decline. And then we just started to see everything run up because of business being facilitated, because we were able to, as a society, figure out, well, if this is where we're seeing a decline, or if these are the restrictions that we're experiencing as a society, what can we make do with, or what can we take advantage of? Why did Zoom run for X amount of years? I think it was a whole like year or two. And then why is it where it's at currently, right? Because at that point in time, right before closures, who dropped the ball? It was Skype. Right. Skype was what everybody used before we started to see this mass adoption with Zoom, because Zoom was able to address a lot of things where friction was happening. The fact that you were able to share your screen in the way that, the fact that you're able to share documents within this sort of setting in comparison to what the leading provider was with this specific type of function. So you do see a lot of shifts dependent on stability and overall what we're asking for as a market. And I keep saying we because every single individual plays a role in how the market moves and overall market sentiment, our willingness to put up money to buy products, what we get bored with, what we see excitement in. This all causes things to fluctuate. Then we can start diving into the understanding of bonds, right? The debt markets. Bonds are fixed income instruments representing essentially a loan made by an investor to a borrower. I don't know if that makes too much sense to you all, but we'll have a whole we'll have a whole breakdown or workshop specifically with bonds because that's something that is playing a big role in what we're seeing today with tariffs and the big shifts that we're seeing, how that's affecting the bond market. Why is it that the stock market dips every time that we see a run in the bonds? What happens when we see a dip in the bonds, and why is the market reacting in a certain way, right? Essentially, when a bond is being exchanged, the person or the borrower is agreeing to pay back the loan with interest over a fixed period of time. So this is why there's an interest in bonds. So essentially, whether it's a government bond or some sort of public company bond or a public company issuing these bonds, what you're doing is you're telling them, hey, here's my money. Make use of it in whatever way that you want to make use of it, but I'm holding this contract that says I'm going to get X percentage in return for lending you this money. So you're literally lending the organization, whether it's government, public company, your money under a contract that you'll receive interest. So a little bit different than the equities, right? Because with a bond, you're not necessarily assuming those things we talked about with the voting rights, with the right to gain appreciation on a share and things along these lines. You're essentially just giving a straight loan and building a contract. That is what a bond is. Bonds provide more predictable income streams, and they serve as lower risk investments. And they're lower risk because you're guaranteed to get to an extent, right? Yes, a government could topple, X, Y, and Z can happen, but historically, you're guaranteed to absolutely receive that return from the bond. And I wanted to dive deep into this or have a separate workshop for us regarding bonds because they help stabilize economies by financing critical infrastructure, right? Public projects run on this. So when we all voted during the election, I'm sure that in each one of our regions, there were additional things that we got to vote for, right? Within my specific region, we got to vote for things like water quality projects, funding for public school system, X, Y, and Z, public affordable housing, things along these lines. So a lot of these things, when they're being issued by the government, they're backed by the government because of those specific types of reasons, right? They're telling us this is why we need your money, or this is what we need to use your money for. So essentially, it's aimed to provide a constant flow of money. And right now, not to confuse you, but right now we're seeing a lot of sway back and forth in the market when it comes to tariffs being issued, because what happened just this past week or so when our president decided that we were going to tax China X amount. What did they do, or tariff China X amount? What did they do? There was a point in time where they sold some of the U.S. bonds that they held, right? So when this happens, and what it does, it essentially starts to create a bottleneck. So technically, what could happen in a worst case scenario is all of the other countries that hold any sort of US government bond, if they were all to sell at once, there is no money flow, right? We're not seeing that exchange of money between country to country. So essentially, it starts to create a bottleneck, and that's when you start to see a bank run happen. That's when you start to see money scatter everywhere, whether it's into things like gold, precious metals, different commodities, things like that. So I know that's not like a whole breakdown of it, but these are general understandings of the bond market, why it's needed, and why we're going to be covering this in depth as we go along in our course. That being said, we then dive into things like commodities, as we just referenced. These are tangible goods or raw materials that are traded on exchanges. You can literally buy physical gold. You can buy oil barrels. You can buy natural gas. various agricultural products, whether it's corn, wheat, soybean was a very popular one during COVID closures, precious metals, so your silvers, your copper, things along these lines. Energy will always be crude oil, natural gas. So those are the two top energy commodities. Metals, typically the top three are gold, silver, copper. When it comes to agricultural commodities, it's typically corn, wheat, soybeans, coffee is what we've also seen an increase in. Overall, commodities, a lot of people trade the futures contracts of them if you're looking to trade commodities or to see or to get some sort of catch some sort of big shift as you might see markets moving or certain things toppling or things being exhausted. Typically futures contracts is it's what's being traded. A lot of that has to do with hedging against inflation and just overall speculation and different imbalances when it comes to different commodities. The commodity market does provide price discovery. So when we're talking about those futures contracts, essentially what it's doing, it's front running us a price or telling us this is how we see these goods being priced in whatever the time frame of those contracts being set for. So a lot of this or the intent with trading the futures contracts for these commodities is ideally to stabilize the supply chain and manage the changes in the inflation of these prices. Of course, that's not always the case. It can be used against us where prices are driven up, like we've seen in coffee, right? Why are a lot of coffee companies closing, especially independent sellers that are selling whole bean coffee or ground beans, things like that. We've seen a lot of closures in the past year because of that imbalance and the destabilization of that specific industry. We can also go ahead and develop our understanding of foreign exchange. So, what are currency markets? There was a specific case that we'll dive into with Soros and a lot of these other what people see like long-standing titans within the financial industry. My intent is to build out a profile for all of these big individuals, whether it's specific CEOs, people like Jamie Dimon, a lot of these popular figures, just to develop an understanding of how did they get started. And you'll probably quickly catch on that a lot of them have a really good foundational understanding of currency because that's what's playing a role in how we spend, right? The valuation of our money, whether it's the US dollar, whether it's the yen, whether it's the peso, whatever it might be, all of these have a role in each other's prices. And when we start to talk about the tariffs, when we start to talk about certain industries growing within certain regions, within certain countries, all of these cause fluctuations, especially when we start seeing some sort of political tensions between countries, and that might even at some point in time present us with a great opportunity to take on a currency trade, right? So I want us to understand how am I able to profit or manage a trade within equities, within bonds, within commodities, within the currency markets, within crypto. How am I able to take advantage of all of these markets and vehicles that are found within these markets? When you take a look at currencies or forex itself, it is the largest and most liquid financial market globally, right? Because it's the literal currency of each individual country. There are three main types of transactions: spot transactions, forward transactions, swap transactions. Spot transactions are immediate exchange for currencies. So when we travel abroad and we exchange our home currency for that specific area's currency, that's a spot transaction, right? When when I think about, I'm actually blanking out, but not too long ago when I exchanged US dollars for pesos, it was like one US dollar per like 20 something, right? Or 19, it was right around that. So you'll get an understanding of why is it possible for people to make a living off of currency exchange? And how do you find the gaps between currencies, and how can you move from currency to currency and potentially build yourself a small winning by doing that, or just understanding how these fluctuations work? When you look at forward transactions, you're talking about future exchanges. So it's essentially a futures contract of that currency specifically. When you're talking about swap transactions, or when you look into swap transactions, it's talking about the simultaneous buying and selling of currencies at different dates. So what does it look like? And this kind of has a role with those forward or futures contracts. So we'll get to dive into what all of that looks like. Essentially, currency trading allows for profit from currency fluctuations. As we stated, it does provide an opportunity for you to hedge when it comes to international business. This is why we see a lot of organizations, a lot of big companies hold offshore accounts, right? When we're talking about the US dollar being devaluated or X, Y, and Z happening, well, why do companies do that? And as an individual, how can we potentially benefit from that understanding of being able to hedge based off of the different currencies that are out there, and just overall an opportunity to diversify yourself, right? Especially if you want to be an individual that isn't necessarily tied down to one specific place, one specific country. Yes, you might have your home base, but you might want to find yourself abroad, traveling and having that freedom. It will become very beneficial for you to have all this understanding of where can I store my money and how do I do it properly, right? How do I do it in a legal manner? Lots of opportunity there. When we take a look at the crypto market itself, they're digital assets. I think this has been the largest growing market. I think we're all fairly familiar with it itself. The two largest ones that I will always stress or emphasize are, of course, going to be Bitcoin, that one being the legacy currency, Ethereum just being another legacy currency, and then other side projects, all dependent on the functionality of them, right? And what is the actual use behind them? There's a lot of trouble, or I would say it lacks a lot of stability because of all of these different things or projects popping up. And a lot of us not really knowing or understanding, well, what is the utility of this, or what's the use? How do I potentially seeing this work on a day-to-day basis for not just myself, but society as a whole? So very, very tricky place to be in, and to really feel comfortable holding wealth long term, or trying to build because of those large fluctuations. But there's definitely an opportunity there. And as you've seen things yourself change in the even just the past 5 years now, it really is a push towards having some sort of decentralized process, right? It's the understanding now, or the building of an understanding of us as individuals of why does the Federal Reserve exist, and why, so why, how did it get started? Why does it exist? And why do we still allow it to happen? Or why do we still allow it to function in the way that it's functioning currently, right? Because there's a lot of um, wrong, I would say, that that is done. So this is why we see a large push and interest in the crypto, is just finding a way to transact between one another without having some sort of middle person taking money from that transaction, both from the person, both from the seller and the buyer, essentially. So, lots to dive into it. I'm very stoked about having the opportunity to kind of thread the needle, right, and weave all of these markets together, and for us to have that really solid understanding of, and I would say the confidence to maneuver in any of these markets, and then at the end of the day, finding ourselves then looking into things like property and the real estate world as well. Are you all familiar with G.K. Chesterton?
I'm not.
Okay. Awesome. I know that we are running a little bit longer than I anticipated or that I had promised you all. So I hope that you all are able to stick along. But that was the breakdown of the core market concepts that we'll go over. These are things that we'll now see a lot more information on throughout this week go live in the Discord. So definitely keep an eye out. I'll tag you all and I'll give you access to all of the links that I'm using so you can do your own research and see where I'm getting all of this information. I never just want to provide and throw info at you without you having the source, right? We're all here to build that knowledge together. So all of that will be available to you. I'm now going to transition and wrap up a lot of our conversation with this specific portion of G.K. Chesterton's The Fallacy of Success written piece. So he is a writer. If I'm not mistaken, this was published in 1902. The QR code here will take you to the link where I'm reading this off of. I'm going to read it in its entirety, and my hope is that you all take the time to reread it on your own and really develop an understanding of what does this mean to you, or how might it resonate with you. And after we go through this, I would love to open it up to some conversation, just to get a better idea of what did you grab onto, and do you all understand what he means and how this relates to current day. All this was written in 1902. It's very prevalent to what a lot of us and just what society as a whole is experiencing. So we'll go ahead and go over this piece against it. Again, it's called The Fallacy of Success. He writes, there has appeared in our time a particular class of books and articles which I sincerely and solemnly think may be called the silliest ever known among men. They are much more wild than the wildest romances of chivalry, and much more dull than the dullest religious tract. Moreover, the romances of chivalry were at least sorry, the romances of chivalry were at least about chivalry. The religious tracts are about religion, but these things are about nothing. They are about what is called success. On every bookstall, in every magazine, you find works telling people how to succeed. They are books showing men how to succeed in everything. They are written by men who cannot even succeed in writing books. To begin with, of course, there is no such thing as success. Or, if you like to put it so, there is nothing that is not successful. That a thing is successful merely means that it is a millionaire is successful in being a millionaire and a donkey in being a donkey. Any live man has succeeded in living. Any dead man may have succeeded in committing suicide. But passing over the bad logic and bad philosophy in the phrase, we may take it as these writers do. in the ordinary sense of success in obtaining money or worldly position. These writers profess to tell the ordinary man how he may succeed in his trade or speculation. How, if he is a builder, he may succeed as a builder. How, if he is a stockbroker, may succeed as a stockbroker. They profess to show him how, if he is a grocer, he may become a sporting yachtsman. How, if he is a 10th rate journalist, may become a peer. And how, if he is a German Jew, he may become an Anglo Saxon. This is a definite and business-like proposal. And I really think that the people who buy these books have a moral, if not legal, right to ask for their money back. Nobody would dare to publish a book about electricity, which literally told one thing or nothing about electricity. No one would dare to publish an article on botany, which showed the writer did not know which end of the plant grew the earth. Yet, our modern world is full of books about success and successful people, which literally contain no kind of idea and scarcely any kind of verbal sense. So that's the initial introduction to that writing. I would love for you all to take the opportunity and the time to read the rest of it. It dives into specific individuals. So you start to develop a conversation about the Rothschild family, the Vanderbilts, a conversation around Cornelius, and then starts to dive into the fallacy of Midas's touch. So a really good understanding or a really good intro piece to start thinking about. And the reason why I bring this up is that it's exactly what we see today, right? Just in a different form, especially when we start to take a look at things like social media and the way that the stock market or opportunities in the market, financial literacy, the way that it is digested or the way that it's marketed is really what I'm trying to get at. It's exactly what this guy is touching on right now, or back in 1902. We're the same type of individual, and society, as much as trends come and go, as much as we say we're so far advanced and we're so far removed from what life was in 1902, we experience the same difficulties, and we are looped or we are duped into certain thinking or ways of life because it's what has worked for certain individuals that function in this way, right? So I bring this up because again, my hope with this class itself is to not be that. It's to not be an individual that's here to sell you on anything, or to tell you, hey, you're going to have your dream supercar, you're going to have this multi-floor mansion, whatever, by the end of this, right? That's not the reality of it. My hope is that you all do start to pick up on these things as we go, and again start applying this understanding outside of this specific context, because you'll see it become very prevalent in your day-to-day life. I mean, you can even like he said, a lot of the stuff that I mentioned here, it might not even just be somebody within social media trying to sell you a course. It could be your typical car salesman, right? It could be your mattress salesman, whatever it might be at a furniture store. There's things that go on in our day-to-day life where the intent is to try to twist things in a way that makes it seem more of a mystique, right? I think that a lot of what I saw early on in my own journey and really the difficulty to get to the point where I'm at right now, or why it took so long, because I think it can really happen in a shorter amount of time. But the reason why it took me so long to get to this understanding was that in the first year or two, just those themselves, I had no idea what I needed to learn, and there was nobody necessarily telling me, hey, this is exactly what you should be learning. It was more of a, hey, I know what you need to know. Are you interested? Yes, I'm interested. Well, buy this, or I can tell you this much, but if you want to know the other part, you have to follow this, right? There's always some sort of cloak and dagger type of thing, or there's always some information left out. So that's what one of my big hopes here is that you all are willing to go that extra step to make sure that you are asking questions, and even beyond asking questions here and questioning what I'm telling you, right? I don't want you to take any of this at face value, which is why, like I said, anything that we cover, you're going to have direct access to not only the documents and the content that I put together, but access to the resources that I use. So then you can go that extra step and determine for yourself whether or not this is something that you want to see as truth, right? Not that I'm here to lie to you all or to present it in a certain way, but I want to make sure that you feel that comfort in knowing that you're essentially building this knowledge yourself as well. And he's, by the way, one of my favorite authors. So we'll definitely be touching on a lot of his pieces of work. A great mind. I would dare say he's probably one of the best writers ever. For sure, one of the best writers coming out of the 20th century. So really encourage you to keep him in mind. Various types of discussions will come up, not just related to the market, but his understanding or the way that he grew up and the time frame that he grew up was with these individuals, right? With the oil empires being built, the railroad empires being built, all of these initial industries, and he got an opportunity to really develop an understanding of society at that time and the system that was built. And what fascinates me so much about his writing and just the understanding that he was able to build for us in present day is that it seems like the industry, the markets, those in power, they still operate very similarly. So for us, it's an opportunity to build that foundational understanding and figure out how can I, at a minimum, just take a piece of what they're already taking home on a day-to-day basis. The wrap up or submission, the QR code that you see here, it's a QR code direct link to the group that I have already invited you to. Up here for anybody that's watching this recording, if you want to go ahead and join, there will be a Google Doc form where I will ask for a little bit more additional information if you're coming from the recording. Anybody that's here live, like we've already done that walkthrough. We've already had that conversation, so you're going to be situated after this. No need to worry. But anybody else, I would love to get to know a little bit more about you and just develop an understanding of where you find yourself. Are we in a position to help you and how we can work together? Because this is a community and it is a group that's going to build off of one another. At this point in time, I would love to open it up to you all. If you happen to have any questions about what this looks like moving forward, how to prepare for the upcoming week, I will have all of the content, these specific materials for next lesson out to you all by Tuesday. So that will all be posted in the group. There's going to be a specific section for lesson 2. You'll have access to all of that. So I'd love to open it up to you all if you do have any questions. And I'll go ahead and stop the recording here.